Hello, listeners. I'm Srikumar Krishnamurthy, Senior Vice President at ICRA Limited. In this podcast, I would be sharing ICRA's growth outlook for the various segments of Indian automotive sector for the fiscal year 2026-27. But prior to that, let me take you through a quick snapshot of the sector's performance in the current fiscal. The year 25-26 has unfolded as a tale of two halves, with the first half witnessing subdued demand, while the second half is seeing a strong recovery on the back of policy support and healthy rural demand. Industry sales volumes have been very strong in the last few months. This was primarily aided by the after effects of GST rate cuts. This apart, factors like pent-up demand, supportive rural output, and conducive financing environment also supported the growth. While consumer optimism continues, we see that the wholesale volumes are reaching levels that would weigh on the potential for outsized growth in 2026-27. To share the segment-wise growth estimates, the domestic passenger vehicle wholesale volumes are estimated to grow by 4 to 6% year-on-year in 26-27, and this is going to be supported by sustained demand momentum and favorable consumer sentiments. Two-wheelers, on the other hand, is likely to expand by 3 to 5% year-on-year, with its growth moderating on a fairly higher base. In the commercial vehicle segment, while replacements, infrastructure activity, and steady economic conditions remain supportive, regulation-led price hikes can constrain higher growth in the near term, particularly for trucks. However, volumes in the bus segment are expected to be strong. The overall CV segment is expected to grow by 4 to 6% year-on-year in fiscal 26-27. While I spoke about the growth outlook, there are multiple themes emerging in this sector in the recent years. The key ones include vehicle premiumization and transition in powertrain mix, which effectively reflects a structural shift in consumer preference and technology adoption. Electric vehicle penetration across segments is projected to increase meaningfully over the next 3 to 5 years. And this is going to be led by strong adoption of electric two-wheelers, three-wheelers, and buses. While the penetration in the electric passenger vehicles and LCVs are also expected to rise steadily from a fairly lower base. Continued policy support, improving charging infrastructure, and declining total cost of ownership are expected to underpin this transition. In a nutshell, the Indian automotive industry is currently at crossroads amid changing consumer preferences, technological advancements, and focus on sustainability. ICRA expects the growth trajectory to continue in 2026-27, even as growth is likely to remain modest across segments. Thank you for listening and stay tuned for our upcoming podcast. Good day.